There's nothing we love more than real estate bubbles. I mean, stock bubbles as well. And for a really good reason. You're getting something for nothing. You're sitting in a house you enjoy, and instead of going up with the inflation rate, 2-3% a year historically, it's going up at 10% or 12%, or in some areas even more. And again, life is good. Sitting in your house, making money, doing nothing. And then some people say, well, gosh, I'm not going to do that. I'll do something and I'll start buying houses, fixing them up and flipping them. And it's an easy game. In a housing bubble. Now, normally houses do go up at the inflation rate. And therefore, you're making a zero gain adjusted for inflation. So it's not a great investment unless you want to live there or unless you want to generate a fairly predictable income due to rents. So this bubble's going to end. This is bubble number 2. And I just keep saying, why don't people, workers, why don't cities, why don't companies, countries get it that sky-high real estate, healthy real estate's one thing, growing at or maybe just a little above inflation, saying, hey, you're making progress in this city or in this area. Sky-high real estate prices are not good for the economy. They're terrible for businesses. Businesses have their real estate costs, and governments too, which is a very high percentage of government costs, and bureaucrats go up. They have to pay higher wages to the workers in that area, which they do in spades in California and Manhattan and places like that. Households have to pay a higher percentage of their incomes in rent or mortgages, which leaves less for entertainment, eating out, and everything. There's people now slashing their budgets in places like San Francisco and Manhattan, millennials, younger people, just to survive, because interest rates are now going up and housing prices just keep going up in most areas. This is not good for the economy. This is why the economy in its natural means will burst a bubble like this. Well, governments, central banks, and now with tax cuts from Trump, we're just not letting these bubbles burst. Well, they will burst. And you know that, and I know that. It's just a question of when. And I think the odds just go up exponentially over the next year, 2 max. And I think even sooner than that. So we're starting to see signs. Manhattan on the high end. Now here's the difference, and this is a big difference from the last real estate crash in from 2006 to 2012, particularly in 2008, when in the great financial recession. That was generated from the bottom up, bad loans to subprime loans and lenders and borrowers. The subprime crisis. It started with defaults on the low end, and then it trickled up to everything. And of course, in the end, high-end homes always go down the most because they're the most bubbly. This time, it's the opposite. Markets are the most extreme at the high end. I'll just give you an example. The most overvalued market in the world is Hong Kong for median, the typical house in the middle values, 19.4 times income. Of course, there's no way the everyday person on a decent, $60,000 salary could even remotely afford a house at those prices. Well, it's 41 times income if you look at the average house, which skews towards the high end, which shows the high-end markets are far, far more overvalued and bubbly. And that's always the case. This is why I always say people who live in the best areas and the top cities in the world always think, especially rich people, that these are the one areas that won't go down when housing crashes because rich people like them will always buy there. The problem is rich people go up and down with bubbles more than the average person because they own the bubbles. They own the top 1 to 10% own 90+% of all the financial assets, especially stocks and bonds and real estate oriented things. So we have to be wary of bubbles. We've got to get off this thing of saying, you're rooting for real estate to go up. This is going to cause the biggest crisis in our lifetimes. We've seen many stock bubbles burst before, 29, 89 and Nikkei and the tech bubble and stuff. The stock bubbles on their own do not cause the deepest crises and financial crashes and depressions in history. It's real estate oriented. The great real estate boom in the 1820s and 30s that peaked In 1835, governments were giving huge incentives for people to move into the Midwest, move westward, near free land, government funded low interest rates. And of course, this leads to speculation. People don't just buy for better value. They start to speculate when it's that easy. Well, even the Great Depression was more a farmland bust, which was real estate oriented and all that stuff. But it wasn't as much for residential real estate and normal commercial real estate. This one is the greatest real estate bubble we've seen in history. It's the most global. Again, around the world, the greatest bubbles are in Hong Kong, Beijing, Shanghai on the top in valuations, median and average to extremes. And then it comes the Aussies, who I go over there and they love their real estate and they never think they're in a bubble, damn it. You're in a bubble if you're from Australia or New Zealand, okay? You're the second worst in the world after China. And Chinese foreign buyers are some of the biggest reasons your real estate's going up, especially on the high end. And unlike other places where foreign buyers are dominating, Aussies are contributing to the bubble. And even when foreign buyers pull back after recent surcharges from Australia to Vancouver to Toronto to Singapore, everywhere but the United States, more people are slapping on foreign surcharges and taxes to stop these foreigners from bidding up real estate beyond what people can afford. Even when that foreign buying goes down, of all people, the Aussies are stepping in and buying real estate at super high prices. This is stupid. You're going to regret this. We've got to get real estate bubbles, especially when they go to extremes. And this is the most extreme in all of modern history. And in this most extreme in all of modern history, China is the most extreme. And then places like Australia, and then places like Manhattan and California, United States, and the best areas of Miami and London. There's two themes here. It is China, which has had the greatest debt bubble, 10 times in the last, since 2000, in debt, higher rate of debt growth, government guaranteed debt that gets pushed down to build empty condos and commercial real estate and infrastructures everywhere. China's the only country in the world of investors who will buy empty real estate that is overvalued, not rent it out and sit on it and keep thinking it's going to go up. And as long as more fools do this, it does. China's going to have the biggest crash. The other theme, foreign buyers, especially the Chinese, which are the largest ones, but Russians and Arabs and everybody else, Latin American rich people and drug dealers and all, they want to buy where they can launder their money out of their more corrupt countries and where their kids can go and get a U.S. or London or in an English-speaking education. Of course, that includes Singapore and Australia and New Zealand. These are where these foreign buyers love to buy. Now, they are not buying rationally. They buy all cash to launder the most money. And they don't care about the lowest interest rates in history. They buy and often will leave it empty in many cases just to get their money out, or they will buy an overvalued property to launder their money out just to live in for a while or to have their kids live in and go to school. It's insane. These people are not rational. And when things crash, they will be the first to leave because they don't really live there or have a long-term interest. People got to get that too. The Japanese were the foreign buyers bidding up real estate in English-speaking countries in places like New York, London, and California in the bubble way back then. They used their bubble profits with the greatest bubble, the only real bubble back then in real estate, to then invest around the world. And as soon as things started to crash, they retreated from the rest of the world. And all of a sudden you could buy Rockefeller Center or golf courses in California at a deep discount. They lost on that. So get real about real estate. We are getting closer. Markets are starting to crack on the high end. It's just starting. There's rent riots in LA. LA is the second highest city for renters. At 56%, I think it is. Miami's the only higher one at 61.5%, because these are not cities like San Francisco or DC or Boston or New York or Seattle that have high real estate prices, but also have much higher than average salaries, a higher percentage of people, 100K plus, that can better afford these. LA, Miami are cities that have very high real estate because of migration, because of wealthy investors and foreign investors. But a lot of the workers have everyday service jobs. They're not working in Silicon Valley. They're not high tech. They're not lawyers and doctors and stuff like that. So that's where rents are a problem. Chicago is seeing rents just drop 15% because they have such poverty in areas on the south side and stuff. And some of I think the highest rate of underwater mortgages. LA, again, rent riots because people are getting evicted so investors can come in and rent to more affluent people or even to students that are on student loans or funded by their parents rather than minorities. So this is coming to a head. I think in the next year, real estate's going to peak. I think it could peak earlier than that. Real estate gets illiquid fast, so don't wait on this. It is better to be early, even more so than stocks or commodities, because you can get out after a first crash, even though it may be severe, because there will always be a bounce. But real estate freezes up. Look at your real estate now, what you don't love or going to live in forever or pass down to your heirs. I would recommend selling. Vacation homes, commercial real estate. And I am still renting my primary home. Now I'm in San Juan, but same thing I was doing in Florida, saving money when things go down. And I've done that many times and getting very affordable rents compared to mortgage payments and taxes. I own my home, my vacation home, because it's going from 25 to 5 acre zoning and will probably hold up much better and did last time around. So that's the only thing I own. So that's my situation. Your situation is going to be different. Look hard at your real estate, decide what you love and you're going to keep. Otherwise, this is the time to sell.